Do you think there could be a time in future where AI could replace financial advisors?
If there were like 1 crore or 2 crore investors in India pre-COVID, now it's 8 or 10 crore people who are like investing into stocks and equities, mutual
Yeah,
funds.
as you sort of look back over this entire almost like 16 years that you looked into investing, what has your learning been?
Yeah. So I moved from that phase to the next phase was being a day trader, which I did for a brief period of time. Made some money, but lost a lot, lots more money.
Hey everyone, welcome to Econverse, your go to destination for breaking down economics in a way that actually makes sense. Whether it's global markets, finance trends, or the policies shaping your world, we simplify it all for you. Econverse is an AI powered, human curated podcast that delivers sharp, insightful, and unbiased takes on the biggest economic stories. Today, we have a special guest joining us on Econverse, Chinmaya Behera. Chinmay brings us a wealth of experience, having worked in multinational companies, running his own startup, and most importantly, spent over a decade in the world of investing. With an MBA from IIM Bangalore and hands-on experience with navigating the complexities of financial market, he brings a unique perspective on making smart investment decisions. I am excited to dive into his insights on investment, market strategies, and what it really takes to build long-term wealth. Let's get the podcast started. Chinmay, thank you for joining eConverse and chatting with us. To start off with, I think it would be really helpful if you can give us a quick introduction about yourself to our listeners.
Yeah. So thanks a lot for inviting to this podcast. I've been an avid listener of Econverse over the last few weeks, ever since you launched it, and I find the content very engaging. Glad to be part of this podcast. So, about me, I'm Chinmay. I've been in technology and product management space for the last 14 years. I worked at US MNCs like Cisco and then Indian internet companies like Nokia and Redbus, leading product management function at both of these. And then 2016-18, I did a startup called Machina, which is into predictive maintenance and industrial IoT, catering to a few large Indian clients. Since 2018, I have worked at global internet companies like Six and Fly Homes. And currently, I am leading a company called Product Experts, which is again my own startup. It's a boutique product management consulting firm catering to startups and scale ups from seed to series A stage. We have a team of seasoned product leaders who consult these companies on anything related to product management, be it driving strategy or monetizing new revenue streams. So that's a brief about me, and happy to take further questions in this podcast.
Awesome. Well, thank you. So, the way we have structured this podcast is we'll divide it into three sections. Section one is talking about your investment journey and maybe touch down upon basics of investing, how you learned over time. So, let's start with that. So, tell us about like how did you start with investment? What was your thought process like? How did it all come about? What was your day one like? How did it all happen? So, would love to hear your thoughts on that.
Yeah, definitely. So my investing journey started way back in 2009, I would say, as part of my first job, wherein a bunch of colleagues kept on discussing stocks, and I was very curious what was happening in the market. And this was the time when the financial crisis had just hit and the market were recovering from the lows. And there were a lot of talks about, okay, I made 2x or like 50% returns in the last 3 weeks, 4 weeks. And that sort of triggered me. What am I losing out?
Right.
And that's how I got into it. I understood how to open a demat account, got started with a few stocks, again, with the mindset that, okay, in 1 month, 2 months, or 3 months, you can like make a lot of money. That was my initial phase. Over a period of time, I have moved from being a short-term investor who looks at 1 month or 2 month period, doing what I call momentum trading. That whichever stocks are trending up, you simply put into them. And so I moved from that phase to the next phase was being a day trader, which I did for a brief period of time. Made some money, but lost a lot, lots more money. So in day trading, you basically try to bet on stocks which are going in either direction, either going to rise throughout the day or uh, crash throughout the day, and you're betting your conviction is right, whether you're short selling or buying them, and then you make money throughout the day. So this was 2009 to 2012, 13. I would say I was doing momentum trading. And 2013, 14, I used to do, let's say, day trading. Since 2016, I moved into more of long-term investing sort of investor, wherein I invest into stocks based on the fundamentals, based on the market trends, based on analyzing the numbers, the competition, how the industry is doing, and how the stock is performing in general. And this has over the last 7, 8, 10 years, I've stuck to this principle, and this is one area I see that investing can actually help you compound your wealth.
Interesting. And so you've had a lot of experience over the years. What has some of your learnings been throughout this journey? As you sort of look back over this entire, like almost like 16 years that you've looked into investing, what has your learning
Yeah.
been?
The number one is nothing happens in the short term. When it comes to investing, you should always have a long term horizon, long term vision of what you're investing in. Second, to get conviction into a stock or a theme, you have to really invest in yourself, invest in your skills to understand the sector, understand the business. And because the conviction is what will help you hold the stock through the downs, through the lows. It's very easy to identify something which is going up, but it's very hard not to sell it off when it's at 10%, 20%, or even 30% down. That's what makes a difference between, let's say, somebody who's playing short term and somebody who is like making small profits versus somebody who's building wealth or creating wealth.
Right. So in a similar vein, then, like if someone is starting afresh, if someone's new to investing, let's say I
Mhm.
want to start investing, what would your top two, three tips would be if I start investing, let's say today? What would your guidance be like?
Yeah, the number one, I would say, before investing into businesses or stocks, you should invest into your learning about the industry, how stock markets work, how to evaluate businesses, understand balance sheet, understand the financial terms around profit and loss. What are the different statements? What are the things these companies furnish and how to analyze them? So once you get conviction and then figure out how these correlate with stock market, let's say returns in general. So that's the biggest thing. And how you learn could be multiple ways through peers, through like other investors who have gotten into it, reading books, blogs. There are multiple YouTube channels around it. So there are multiple ways to go about it. So this is the most important thing is what I would say.
Got it. So maybe let's shift gears a little bit. Let's get a little bit more tactical. What's your daily routine as an investor? Do you have a set practice or a process that you follow? Like how do you would probably go about like analyzing stocks, for example?
Yeah, I would say I might not be doing it daily, but over the weekends, I do carve out some time.
Sure.
5 to 7 hours a week is something I invest my time into analyzing the stocks either I hold or uh, identifying new opportunities. Regarding the stocks I hold, there are certain hypotheses which I put in while selecting a stock or an industry. Number one, the industry should be growing industry. For example, in India, hospitality or hotels is a growing sector. Tourism is booming. India is putting a lot of infrastructure, roads, airports. People are like going to places they have never been earlier because
Right.
they were not that accessible. So number one is the industry is growing at twice or even faster rate compared to Indian GDP growth. That's one. Second, after I've identified the industry, I figure out who are the top players in this industry. What is their market share?
Mm,
So I typically bet on stocks or businesses which are in a market leadership position and who are able to defend their market share or grow their market share over time. This is very important for me, given that having a larger market share and able to grow it means that you are able to charge more from the customers, you're able to get better deals from your suppliers and all, which means your
mm,
margins are going to expand. So after doing this top-down analysis, I go into stock-specific information like what does their profit and loss look like over the last 8 or 10 quarters? How have they grown their revenues and profit over this period of time? How have their competitors done?
right.
Is the stock I'm betting on, for example, Indian Hotels is a stock I really like. is it doing better than Oberoi Hotels or others in the space? That's
Yeah.
something very important for me. And if they are doing it well on financial metrics, market share metrics over a long period of time, that builds conviction. And then I see on what are the industry trends because of which Indian Hotels is going to win over Oberoi Hotels or EIH Hotels or anybody else in this space. So after this, so for these, I regularly go through the quarterly reports or earnings reports, investor presentations, and also earnings calls. These are 1 hour calls every quarter. These companies furnish for the investors to understand their guidance. Where do they see the industry going, and how do they see their company shaping?
Right, got it. This is really insightful. You mentioned the length and breadth of the process that you go through to sort of get yourself familiar with stocks and like how do you analyze. Obviously, there is tons of data, a lot of number crunching, I'd presume. What are some
Right.
of the most useful tools or websites or reports you would rely on to sort of make that judgment call about whether you want to approach a stock or not?
So in terms of tools, screener.in. So this is a tool in India wherein you can go and check the numbers, just put in the stock and get all of the numbers in a very user-friendly, accessible way. So that's one. And then all of the documents for the stock, be it the earnings reports, be it annual reports, be it competition peers, their valuation versus the stock valuation is there on screener. Apart from it, I use Trendin or Trendline also. That's currently coming bundled with Jiro the Kite, and I like it quite a lot. The third, I'm part of few investor communities or forums, picker forum being one of them, wherein there is a lot of deep dives analysis of investment themes and all by peer investors. So I use these sources. One more source is YouTube channels for I think Alpha Street India is one of the channels which publishes earnings reports of these stocks or businesses on a regular basis.
Got it. Okay, let's take a different tangent. I mean, and I think you've mentioned this in previous questions as well. What are your principles for building a strong long-term portfolio? Like, what are the key sort of things that you look into?
Number one is the industry I choose that is growing at a much faster rate compared to how the overall economy is doing. That's first. And then in the industry, I choose what are the larger players or the businesses who are market leaders in the industry and are growing their market share. These are the first two top filtering criteria. And then third, I go into how efficiently is the business being run. Are they able to consistently generate profits better than their competition? And are they able to like expand their profit margins over a period of time? So after doing these three, I've started analyzing on how the founders or management is allocating
Mm,
the capital generated from the business. Is it being reused in the business? Are they giving out a lot of dividends? Are they acquiring other companies inorganically to grow their business? How they're utilizing it to grow revenues is another thing I see. And off late, I've also started analyzing the quality of management and are they ethical people? Do they follow the right corporate governance norms and all? So these are also becoming very important nowadays.
interesting. Gotcha. When we talk about stocks or equities, we talk about return. But then with return, there's also an element of risk. We talk about risk as well, right? So, how should an investor approach risk management? Like, what's your sort of tool or playbook when it comes to approaching risk?
Yeah. So when it comes to approaching risk, I would say some of the bigger red flags for me after I've done my due diligence analysis is corporate governance. If a company is not playing fairly or not disclosing the right information to you, that inherently means what other things they might have not disclosed. So
True.
that's a very big red flag to me. Any case the company hasn't disclosed something earlier and now at a later point of time they say, okay, we are thinking of doing this, or it was a lapse on our part not to disclose certain income or something. It's a red flag and I simply quit the stock there. The other, in terms of risk management, is larger competition coming in the market, which is going to threaten the company's market leadership and all. Because of which, if the stock tanks, I start. That's an exit trigger for me. Apart from this, anything which goes wrong with my hypothesis was that, okay, industry is growing, market leadership of the company is growing, they're able to increase their, let's say, profit margins over a period of time. If that is true, I'm with the stock. If
Right.
something changes here, then
Yeah.
again, I reassess the situation and try to get out.
Yeah, that makes complete sense. Awesome. So this then makes us to our second section where we talk about Indian stock market and then how we're performing. And obviously, you're not a certified financial advisor, and our channel we don't really recommend a stock, right? We
Mhm.
definitely encourage people to do their own due diligence and identify stock. But we'll definitely want to base our conversations basis your experience so far and what you felt in Indian stock market. So to start off with, let's say if someone's starting off his investment journey now in Indian market, right? Which particular sort of investment vehicle should someone look into? Should it be like a stock, maybe a fixed income or mutual funds? What's your point of view on this?
Yep. So somebody starting off now, I would say you start with mutual funds or index funds in general. So index funds are a specific class of mutual funds which invest into the index, be it an FT or a sensex, and there you are like investing into India's economy in general. You're betting that India's economy will continue to grow at 6, 7, or 8% over a period of time, and you're going to get, let's say, 1.5 or 2x those returns over a period of time. So this is just to get a flavor of how stock markets work, how the go through the highs and lows of market, go through few cycles so that behaviorally or psychologically you're tuned to how the market works. And then as you get more time for yourself to invest into yourself, to understand certain businesses and all, how a company works and how it relates to the stock market, maybe you can go into analyzing few stocks and taking few positions into the sectors and stocks you find good conviction in.
Right. So basically, you start off with an index fund, and then gradually over time, you can start to sort of customize and get into like individual stock and that kind of investing. Right.
Right. Yeah.
Okay. Got it. Which sectors in India do you think are poised for long-term growth? Where do you see India heading, and then which sectors in Indian economy do you think are poised for like a longer-term growth?
There are three or four sectors I really like at this point of time. Financials being one of them. And in financials, there are a bunch of things, be it these lending companies like Bajaj Finance or other companies. Cholamandalam Investment, that's another out-term financial. Insurance is a sector in India. It's very underpenetrated compared to any of the developed economies in the world, and that's growing rapidly. So anywhere the adoption is happening at a double-digit rate, that let's say 15-20% people are new customers are getting added to insurance or getting exposed to these products. That's where I see a good bunch of growth. Again, in financials, all of these new age broking companies, be it Angel Broking, be it Grow is still not listed. These are the ones who are gaining market share rapidly.
Hmm.
And the entire market is expanding.
Right.
So if there were like 1 crore or 2 crore investors in India pre-COVID, now it's 8 or 10 crore people who are like investing into stocks and equities, mutual
Yeah.
funds. So uh, this is uh, this is going to grow and going to go up to a much higher level in the coming decade is what I see. So this is theme number one. Second, I would say tourism or hospitality. There's another
Mm.
theme I see because of the infrastructure related changes that have been done in India, be it building more airports, more roads, much better connectivity to multiple cities, and the multiple governments push for developing tourism. So that's where I see hospitality, aviation, and multiple allied industries getting a lot of boost. So these are two. Third, if we want, I could put in all of the premium consumer experiences, which is catering to like 20, 30 million Indians who are at the top strata of the economic
Yeah.
paradigm.
Yeah.
They are the ones, and here anything from quick commerce to any premium experience provider. So that's the theme I bet on.
This is really insightful for me, and I'm sure for the listeners as well. Is timing the market a good strategy, or should investors be looking at like a more long-term, approach? Or can you like time the market, maybe wait for a dip to buy, or should there be a more holistic approach to when it comes to
Yeah.
investing?
So I used to be timing the market guy earlier in my investing journey.
Okay.
And then over a period of time, I figured out nobody can ever time the market. Anything can or any new information changes can come in at any point of time, and then you're never at an all-time low. The
Right.
There will always be new all-time lows and all. And over a period of time, I figured out a strategy to go about it. It's not that I don't exactly time the market, but whenever there are lows, I try to buy more stocks, and I buy stocks in a staggered manner so that over a period of time, my average buying is low, and then I keep on uh, keep on continue buying over a period of time. For example, if I buy a stock now, I won't buy a lump sum amount. I would keep certain amount for this month. Then I would invest again next month, and this will go on for. There are stocks I have like 70, 80, 90 installments. That's the
Mhm.
way I bought. And I see that time in the market is the biggest factor. It's the most, let's say, important variable, which is directly proportional to the returns you make or the wealth you create.
You mentioned about variable. Uh, One of the variables I wanted to ask you about was not just looking at India as an economy, but looking at it in comparison with the global perspective. In that regard, how does news from, let's say, US market, like Fed news or tariffs,
Um,
that's been the talk of the town, how does that
Yep.
sort of affect Indian economy?
Yeah, so I would say we are currently in a very globalized economy. The companies in India, they don't only serve India, but many of them serve the outside world. Auto ancillaries, for example, certain pharmaceutical companies, IT. These are all major exports from India, I would say. And similarly, India imports a lot of crude oil and multiple other things for their own industries. So the global events, any changes in the global prices or demand supply scenario is going to affect the Indian businesses or Indian stock market in general.
Yeah. Um, and then when we talk about US, how is US stock market performing vis-a-vis Indian stock market? Like, what's your assessment been? And would you recommend someone who's investing to park some money outside of India in global markets?
Yeah. So coming to the first question, I started investing in the US markets 2021 onwards. And my experience has been good so far. And the rationale for me to invest in US markets was mainly diversification,
Mm,
as in US market has very low correlation with the Indian markets, and I wanted to diversify. So whenever, let's say, Indian markets have given low returns, US market has been up, and so on. So that has been my experience. So that my overall portfolio as a balance, it's not like suddenly crashing because of dependence on one market. And
right.
second question, so coming to US market, I would say S&P 100 or Nasdaq versus Indian Sensex or Nifty, they might be roughly doing the same, but giving similar returns. But the variability or the timing of the returns might be coming in differently.
Mm,
Second, when it comes to US market, one gets exposure to stocks which are nowhere there in the world. You can't invest into an Nvidia, which is like serving the whole world. You
right.
might not be able to invest into an Apple or a Google, for whom the entire world is the market and not only limited to US. So such companies are not there in India, and some newer themes around space technology, quantum computing. Again, you won't find such stocks listed anywhere else in the world, but only in the US markets.
Right. So it definitely opens more options for you to sort of
Right,
diversify to your point and get some money which you might not be able to get in India.
right. Yeah.
That makes sense. Awesome. So let's move to our third section, AI. Talk of the
Mhm.
town. It's a big deal, especially after LLMs that have become more mainstream. I think in this section, I want to talk to you about the intersection of AI and finance.
Mhm.
And so, to start off, why is AI such a big deal now in the world of finance?
Yeah, I would say AI is a big deal almost in every world. And when it comes to finance, as I mentioned in the initial parts of this conversation, a lot of analysis is required, be it from annual reports, earnings transcripts, or the conference calls of these companies. And it does take a lot of time gathering insights from these and basing them to make decisions. And with AI coming in with the capabilities wherein you can simply query these reports and get the answers you need. For example, if earlier I used to like go through each of them, take down notes, and figure out, okay, what's the thesis, I can simply put them into a notebook LM or any other LLM tool, and I can write queries. Okay, what's the growth rate of XYZ stock uh, over the last few years? What is the guidance for the next year, and how are they performing on XYZ metrics? So it has become so much accessible now, or so much easier to get generate insights from this data at the moment.
Right. So maybe you could give us like an example, an end-to-end use case where you've integrated
Mhm.
AI into your finance or investing, maybe analyzing a stock, or any other way you've used AI, maybe
Yeah,
just an end-to-end example.
yeah, sure. So earlier I used to put things onto Notion. I have a Notion let's say folder and a structure for my Indian and US stocks which I've invested so that I can keep track of them. Okay, what happened in Q2 of 2022, what happened in Q2 2023, and what's happening now. And in this, I would analyze their earnings reports, annual reports, and also the conference calls, not only of the stock, but three or four of their competition. So it used to take me, let's say, anywhere between 15 to 20 hours to get this done for this entire exercise. Now, a part of it I have automated using NotebookLM. It's a tool by Google, and here you can give it a bunch of information, bunch of sources, be it PDFs, be it text material, be it YouTube video links, and then it simply allows you to query the source and get any information which you want. And also, it provides you a pretty good summary of what has happened in the source you provide. So what has happened is my 1 hour analyzing a conference call, let's say of Keynes Technology or Dixon, it has been reduced to 5 to 10 minutes now because I simply copy the transcript from the YouTube link, I put it into Notebook LM, and then I start asking it questions. Okay, Q2 of 2024, Keynes management said that they're looking at let's say 2000 crore revenue this year. Have they adhered to it, or are they deviating from it? So it will simply go through the call and answer it. And if they're deviating, why is there a slowdown, or why is there additional growth coming in, or if they're stuck to the guidance, why so? So this is again validating my hypothesis of investing into them, analyzing the management in terms of what they are saying and how how the company is doing compared to its competition. And then I'll do it the same for four other peers or competition of the same stock. So uh, 4 into 1 hour, 4 hour work reduced to, let's say, 20 or 30 minutes now.
Definitely a time saver. Do you think there could be a time in future where AI could replace financial advisors? Could there be a time sometime soon?
At the moment, I can see that AI can replace a part of what financial advisors do in terms of automating many of the workflows, many of the current analysis work, which they were doing manually in let's say, a very tedious way. Where I see let's say, where I'm not confident AI is going to replace financial advisors is them understand the psychology of the investors, their customers. Let's say Chinmaya invests in an aggressive manner into growth stocks. His risk appetite is for 30% down or something. He's okay. He can even go till 40% down until he's convinced and all. And he's investing for these goals versus Anshu's psychology is, let's say, more risk averse, more conservative. He would panic if this goes and all. So that sort of relation, the understanding of the psychology of humans, which a financial advisor will have, and then he can talk to you in a soothing tone or like more, uh, let's say, convincing manner based on how you feel, based on how the market has been, based on how your previous conversations have been. So this is where I don't feel that AI is still there. It can automate all of the, let's say, input points or the talking points for the financial advisor to speak. But the way to convince the client, the way to keep the relationship going, I don't think it's still there.
Right. Got it. And then let's say if I am starting today, I'm new to AI, I have some idea about AI, I have some idea about finance, but if I want to start using AI and maybe like integrate AI in my day-to-day work routine,
Mhm.
where can I go? How can I start? What should be my step one in that aspect?
So here there are two parts. One is your understanding of AI, how you can improve it. I'm sure most of the listeners or viewers watching this, they are already used to ChatGPT or Gemini or Claude and other LLM tools. So definitely they are using these in a certain form to analyze information, to derive insights, or to create visuals or like create content. So this is a part one at a very fundamental level. And then all of these are tools or agents already out in the marketplace which you can use. Second part is understand your own financial workflows. What are the things you do on a day-to-day basis or a week-on-week basis? And then figure out how to use these tools in a uh, non-jointed way or discrete way, that you use ChatGPT for something, Claude for something, a NotebookLM or any of the Google tools for something. And then once you figure out, okay, these are the workflows I can, like, let's say, automate few things rather than doing, spending my time doing this, start using those. And then eventually figure out how to build maybe AI agents to automate a bunch of these so that you are not required to go to YouTube, figure out, okay, if the video is there or conference call link has been submitted or not, but the agent does it. And Monday morning or a Friday morning, you're getting a summary of all of these done and
Right.
you're just digesting the insights.
That would be so cool. Yeah. I mean, that would make my life so easy. This was really helpful. I think we'll move to our last section now, which is the fun part. We'll do like a quick rapid fire with you. I'll have a list of questions. I'd love to get your sort of top of mind responses to that. Okay.
Mhm.
So if you had only one stock to invest for next 10 years, an Indian stock, or maybe let's open it up, maybe globally. But if you had like one
Mhm.
stock to invest for next 10 years, which stock will that be?
Yeah, in terms of Indian stock, it's Zomato or Eternal. So that's one stock I am quite bullish on. So Zomato was just a food delivery company till 3 years back. Now they've got Blinkit, which is into quick commerce. And now they've also launched a Descript, which is into going event ticketing, that sort of business. And I see each of these segments are growing rapidly. And I have huge conviction on the founders and the management to have a strong understanding of the Indian market, Indian consumer market, what are the needs. And they've consistently been creating new categories in white spaces, which did not exist before.
Awesome. What's the biggest myth about investing that investors should stop believing?
Yeah, I would say timing the market is the biggest myth, I would say. Uh, Anybody I speak to, they say, okay, uh, shall I take this stock now because it's at a all-time low, or will it go lower further? So timing the market, and then anybody's ability to predict where the market would be tomorrow, or let's say in X days or months or years time. That's the biggest myth.
Awesome. One book that changed your perception towards investing, if you want to recommend to anyone.
Yeah, I'd say Psychology of Money
Oh,
by
that's a good one.
Morgan Housel. Yeah, it's one of the best books I've read on investing. I've taken notes to it, and I think there are 15 or 16 different points. If you go through it, if you, before every investment decision, if you like just revisit it, it would do wonders for you.
Hmm. Your market prediction for next 5 years, bearish, bullish, where do you see it going?
So I'm quite bullish on the market over the next 5 years for sure. till 2028, 2030. I see Indian economy growing, GDP growing, and of course, the market capitalization will continue to grow because of the GDP growing or the businesses gaining out of it.
Awesome. Well, that's what I had. It was good to chat with you. I personally learned a lot. I'm sure all our listeners have learned a lot listening to you. And again, I want to thank you for joining Econverse, taking your time, and I'm glad we could do this.
Thanks a lot, Anshul.